Okay, so the reason why I got into the sale, it was, as you can see on RSI, we was very overbought and we was still buying where RSI was creating a nice divergent. I'm not expecting huge sale. I would like the price to come back to the level from the signal. We got the support view up and POCs at the same level, and my first TP is there. And if we will be back much earlier on, we saw that that area was actually creating a bit of a struggle earlier to pass it. So for my reasoning for it was we'll go lower with the RSI, and then we can make another move up. Second.
Three major car companies, we've got earnings up today, Volkswagen, Mercedes-Benz, Renault, a bit more contrasting picture.
Something like that.
Missed expectations. Mercedes and Renault a little bit better. It looks like a big thing.
Let's see what happens with the London Open. If we can come back, test the view up and stay above the view up, or we will go lower and go for my second TP. London opening in 3 minutes. Then we'll see what it will bring to us. Let us open trade long as well for the oil. Stop lost. My first TP will be around that area where the bear is sitting. But don't look too good. So far we are quite bearish on oil. So risking $200.
A few minutes ago until the start of cash equities trading. Welcome back to Markets Today. I'm Anna Edwards in London. Here are your top stories. Asian stocks, US and European futures rise as investors bet the Fed's next move might be a pause after it raised rates to the highest level in 22 years. Attention now turns to the ECB. Investors price in another hike, but with economic data looking weak, will it be the last? We're live in Frankfurt. Plus, a bubble day for buybacks. Barclays, Total Energies and Shell all plan to return cash to shareholders. We will speak to executives from VW, Mercedes, Anglo American and Roche about their results. Welcome back to the program, everybody. Just over a minute then until the start of cash equities trading. Let's have a quick check of some assets.
Okay, 10 seconds.
What a green on this screen. Hang up by 1.3%. We'll see some of the EV-related companies doing well there. VW making an investment, doing an investment with a local EV company. That's having a lot of impact. Nasdaq futures trading higher. We've got another round of Meta. Nasdaq futures up by 0.7%. We saw strong performance by those Meta shares in after hours. And it looks as if yesterday's mixed picture around tech may be being replaced by something a little bit more positive. This is
Can we try to break the trend we've got here and test the trailing stop?
By policymakers that there will be a hike from the ECB, so the focus really does turn to September. What will the parameters for a hike look like? Just how data dependent is the ECB right now? And here's the Brent crude price, 83.48. We were just talking to the CEO of Shell, talking about what they're seeing in China, where they're seeing strength, and where they're seeing weakness. And in fact, some of that weakness coming in the export-related parts of the business. So that's of interest on the China story. This is what we see on futures then. We would expect to see CAC futures outperform today.
So open in London, not the best one.
The luxury sector really under pressure in yesterday's session, so we expect to see a bit of a bounce back there. Elsewhere, we factor in the Fed, we factor in a host of
It would be amazing if we can open below the Frankfurt.
And see just how that combination of the Fed, the tech earnings story, and the wider European earnings story, how that adds up for European equity markets. The Spanish IBEX up by 0.4%, the FTSE 100 fairly flat this morning. We see a continuation of strength coming through on assets that seem to be linked to the China story. So the Australian dollar continues to gain. The euro we've already checked out, but a little bit of weakness in the dollar, leaving room for the euro.
200 is red. We try to stay below 200. Yeah, but 236 are the same level.
And we're seeing it in the European story to some degree at least. We've only got the Spanish IBEX in there for now, but other European markets probably opening in the green as the futures picture dictated. And we're also buying sovereign bonds, so we're seeing those yields coming down a little bit. Not too much on higher oil prices of late, as those iron ore prices drop a little this morning. Brent crude up 8%. Onto sectors then, and we've had so many corporate earnings stories coming through this morning, and the sector picture looks broadly green, doesn't it? So many of these sectors in positive territory, and we don't necessarily see any standout movers. I can see consumer stocks up by 0.9%. Is that a bounce back on some of those luxury names over in Paris? We'll check out the details on that one. Travel and leisure bouncing from recent weakness as well, up around 0.5%. Interesting that it's the basic resources and energy stocks that go weaker, so perhaps that will lead to London underperforming a little bit. I think this might be the price of this might be the cap from yesterday, down by 1.4%, but we will look to get an opening price on the French market as soon as we have one. Let's get to the earnings stories then. Sam Onstead joins us from our Markets Today blog to give us his thoughts. Sam, we talked a little about the earnings stories coming through from the car sector, and it's pretty mixed, wasn't it? We'll have more on the car sector in a moment. Talk me through your thoughts on the energy markets, because buyback seems to be a bit of a big theme there.
Yeah, a very significant thing. And I think actually, if you took the earnings today from both Shell and Total, I think they were broadly as expected. So a big drop in profit, almost entirely driven by energy prices coming down over the course of last year. But as is often the case, when you know that's going to happen, you might well sort of strengthen your buyback. And I think that's what you've seen today from both Shell and Total, and actually also Barclays.
Oh, the market's buying today. Dollar is dropping, getting weaker.
Barclays. The shares actually a little weaker this morning, down more than 5%, 5.3%. After it seems to be a miss on the investment banking side of things that seems to be driving that, but they were trying to offset that, I suppose, with the buyback.
Yeah, I think with Barclays, this has been a very, very busy week already so far for UK banks. Barclays is a slightly different beast, to Lloyds and to NatWest. The investment bank is a huge driver for them, and they're investing quite heavily in it too. So that missing expectations is not necessarily what folks would have wanted to see. You actually had a similar result out of BNP Paribas in France this morning. Fixed income trading going down more than expected. That for them, they were offsetting that through cost controls.
Okay. Let me ask you about the Bank of England story that we touched on a little earlier with Mark. Run us by the news line coming through there, because we speak to economists fairly often who might raise concerns about the dangers hiking too fast. Some might have that view. Others will say, no, you've got to be laser focused on inflation, and that's not really a concern. So what are we hearing from this group that advises the Treasury?
Yes, and what we're hearing from them, as you say, it's an independent group that advises the Treasury. They have some concerns about the speed of hikes and whether they're going to push the UK into a recession that I think they believe to be unnecessary. This is not something that's completely out of the blue. You have heard, some people on one side of the debate would say that's part of the case. You've also seen, of course, over the course of the last few weeks, the bets on where rates are going to peak, which have come in a little bit. So it just adds to this sort of swirling debate that we now have for the Bank of England next week.
Okay, swirling debate continues then. Sam, thanks so much. Thanks for joining us. Sam Ansted from our Markets Today blog. Remember, of course, you can get further details on the front page of the Bloomberg UK website. That is at least where you find a link through to the Markets Today blog. You can click through onto it, or you can type TLIV go onto the Bloomberg terminal. That will also take you to the same location. Now, we've heard from Mercedes-Benz today. Mercedes-Benz has raised its earnings forecast for the year, helped by rising sales for high-end cars and profit growth at its van division. And we were speaking earlier on, just with Sam actually, about some of the themes coming through in the earnings story, and he was telling us about how the high-end producers don't seem to be suffering from the same sort of lack of consumer confidence as the lower-end points within the car
Price
sector.
action is
And
very
that matches up
slow.
fine with what we were discussing in the luxury space with our colleague Andrea Felstead just yesterday. So on the Mercedes story, the company saying that it now expects industrial free cash flow to be slightly above the last year's level rather than in line with it. You might have thought that guidance might lift the share price a little bit, but actually it's moving lower this morning. So the Mercedes-Benz Group share price is down by
Machines are trying to
1.3%.
break the
We spoke to the CEO
trend on
of
RSI
the
line.
business about the outlook for the
Or
car
we
maker.
test the low of it.
We're watching the macroeconomic environment quite carefully, and of course we saw the Fed raise rates again in the United States yesterday, and it's expected that Europe will follow. The Chinese economy post lifting the restrictions have not yet gained the momentum that many expected, but with that as a backdrop, the first half of the year has been very solid for us, and of course our strong products are underpinning that success.
Okay, we're testing a
And
trend
we
line.
like to keep that pace in the second half of this year. That's why we
Each surge
guidance.
smaller, but we've got a hidden bull by Fairtrend.
And I want to ask regionally, what are you seeing? What are you seeing in the United States and in
I'm
Europe
break
right now?
even now.
United States, the three major economic regions, up until now, I think it's the economy that has
Actually,
been
no, our
the
list 3
most
points.
resilient. Then again, of course,
Previous day
last
high
half
was my
level. I gather the goal of the Fed is to slow things down a bit to get inflation under control. Europe has been behind that, and as I said, on China, I think many people expected that coming out of COVID that it would rapidly go up. That has not yet happened. There's been some signs from the government they're taking some action, but we will see how that unfolds in the second half of the year.
And do you have any? And what is the optimism on China? Do you have any clarity on what? Because they want to boost car sales. That is part of the action stimulus that they're going to unroll. Do you know what those measures are going to be, and how do you expect that to actually develop in the next 2 quarters?
I mean, different industries are linked to each other, and automotive is one of the most important industries in China, of course. things that they're doing on the real estate side to maybe get that situation going a little bit might have a positive effect on consumer sentiment. We shall see, but I think it's too early to tell how that's going to develop in the second half of the year. So let's not speculate and see what they do.
Mercedes-Benz CEO Ola Källenius speaking to Bloomberg's Oliver Crook after the car maker's earnings this morning. Now, staying with the auto sector, Volkswagen has fallen in early trading after announcing it is working to bolster its cash position. The stock down by 3.2% as higher logistics costs and intensifying competition in China weighed on the second quarter earnings. Bloomberg's Oliver Crook also spoke to this business, this time to the CFO, Arno Antlitz, about his $700 million deal with the EV maker.
Look, we are very strong in China in the combustion engine business, with market share about 20%, but we have to catch up in the EV segment. And in order to catch up, we came up with a strategy with basically three pillars. Two we discussed already. Let me recap the two quickly. One is more local for local development. So we opened and we founded a company in China that will eventually have 2,000 R&D people, and they will develop China for China, closer to the customer, 30% more speed. This brings the first step of competitiveness. Second, we team up with local technology partners to step by step improve our current platform, the MED. For example, together with Horizon Robotics, we improve driving assistance function together with Thundersoft. We improve in-kind.
We got the barrier bonds price. Try to make a new high. It make a new high actually on the session.
Let's call it local product partnerships. So with that local product partnerships, we take into account that the Chinese
Now dollar is dropping. So look like we will go higher.
As early as 2026,
I took first TP at 15 points, so not risking any money, only 3 points from the second TP.
To have an even stronger setup in China, and the same is true for Audi. They will work closer together with the SAIC. So we have really this three-pillar strategy, and we are rather confident that with this strategy, we will catch up at least in the midterm.
And of course, the message from the government in Germany, however, has been de-risk, de-risk, de-risk. This is sort of the opposite, the re-risk. How do you insulate yourself to some of the concerns that the German government is flagging on China?
You know, from our point of view, this fits into the strategy because all the initiatives I just mentioned, more local R&D, local for local, local tech partnerships, and also local product partnerships, they work on local for local strategies. So these products are not meant for the global market, but rather improve our competitive position in China. And from our perspective, they fit into that strategy.
That was the Volkswagen CFO, Arno Antlitz, speaking to us. Later today, we'll be speaking to other car executives. The Renault CEO, Luca De Meo, will be with the team at 9:40 UK time, so stay with us for that. Here's what else we're watching out for today. Yesterday was all about the Fed. Today is about the ECB. At 1:15 UK time, we will get the ECB's rate decision with a quarter-point hike expected. President Christine Lagarde holds a news conference after the decision. We'll bring you that live, of course, here on Bloomberg TV. At 1:30 p.m. UK time, we will get some key US data, including GDP and initial jobless claims. Also today, Russia is hosting the African heads of state for a summit as President Putin seeks to show he isn't isolated internationally despite ending a key grain deal this week. We've seen that have an impact on soft commodity prices. We understand it just flashed across the Bloomberg terminal that President Putin might speak at the end of that conference. And over in the United States, the Italian Prime Minister Giorgia Meloni will be meeting with President Biden. Relations with China and the war in Ukraine are surely going to be at the top of the agenda. Coming up, we'll continue the earnings themes, this time around basic resources. Anglo American is the latest miner to post lower profits and lower its dividend amid a slowdown in China. We'll speak to the CEO though next. This is Bloomberg.
Okay, I'm out of my short.
This is Markets Today, 14 minutes into the European trading session, and one area of weakness around the UK stock market. So we're seeing
Now let them go higher first.
earnings story from the US and the European earnings story all weighing in here. Let's get to one of the businesses reporting this morning here in Europe, here listed in London, of course, the Anglo-American mining business. It's the latest miner to post lower profits and lower its dividend. That's as China's economic slowdown continues to dampen earnings for the world's biggest mining companies. Anglo reported underlying earnings of $5.1 billion in the first half, down from $8.7 billion last year. Let's get into a conversation then about where this business heads with Duncan Grumblad, who is the CEO of Anglo American, and he joins us now. Duncan, thank you very much for joining us. Let me start with the role of China in your earnings story. How are you doing in China versus expectations? Because this does seem, just for the rest of the sector and for yourself, does seem to be something of an area of concern for investors.
Yeah, morning, Anna. Absolutely. China is very important to the whole of the world and particularly to mining. It has really weighed quite heavily on the results for the whole of the industry, I would say. And I think fundamentally this is a function of everybody's assumptions as to how rapidly China might come out of the COVID restrictions. And I think there was a bit of an assumption that this might happen a lot earlier than it actually is happening. So I think that's what you're seeing weighing on the results at the moment.
Yeah, there's the post-COVID sort of reopening. There's also the property sector and the ebb and flow of that.
Going down
And I know
now.
the Politburo has suggested it will provide support to the real estate industry, which accounts for around 40%, I think, of the nation's
Such a
income.
mess here.
What signals are you getting as to the level of stimulus that industry is going to get and what that means for you?
Yeah, so what the people on the ground
Oh,
are telling me is that there's definitely movement in this direction. So as anticipated, this type of stimulus is likely to happen, and what we've just heard from the
testing the
Politburo
SI if they
is
can
very,
break
very
it.
positive in this regard. So as I say, this is probably much more of an issue of timing, of when it's going to happen as opposed to if it's going to happen. And we are starting to see signs of that turn, but a lot slower than we first expected them to happen.
Yeah, a lot slower than many expected, I suppose. Let me go to a different geography sector, and Botswana. Anglo's De Beers business has recently signed a new long-term deal with Botswana, which gives the country a bigger percentage of the money made when these diamonds are mined. I'm sure there are good reasons for all of that. But in terms of the business and the role it plays within Anglo-American, does it change the way that De Beers is able to compete for capital within the Anglo-American parent?
No, it really doesn't, because all of our businesses compete on equal footing for capital, and that capital is allocated based on the fundamental returns that those businesses offer. We were delighted with the agreement in principle with the government of Botswana. This really cements what's been a over 50-year relationship and puts it on even more of a solid footing to go forward together for at least another 50 years, because part of this agreement was the extension of the leases for 25 years on the ground out there. So really good business, really great assets, and we're all delighted with this agreement in principle.
Does it change how you see the long-term picture of your ownership of De Beers, from what you said there about the decades ahead? It doesn't sound like it.
No, it certainly doesn't. As I say, these are the best assets in the industry as far as diamond production is concerned. And what's more important is, like many of the other commodities that we see across the whole slate here, they are very difficult to find. And there have been no real finds in diamond resources for many, many, many years now. So that's a real advantage to have two of the very best assets within the portfolio.
Can I pivot to the UK then, Duncan? And there's a lot of focus on, of course, the Woodsmith fertiliser mine that you have in the north of England. Some investors are not entirely convinced around the timescales and the prospects of this. What can you say to reassure investors of what you're expecting there?
Well, I tell you what, Woodsmith is a polyhalite mine, and it's going to play into one of the most important demand themes that I think are going to pervade society for many, many decades to come, and that is the provision of food and the security of food, but doing so in a way that it is also friendly to the planet from a carbon neutrality point of view. And in that sense, the resource that is Woodsmith is almost a unicorn. It is without compare to or comparison to anything that exists in the same space. And we are on we are on track to develop that both from the mine point of view and from the market point of view. So that's really exciting. When this is built, it's going to be providing an enormous amount of high quality fertilizer, with a right carbon footprint in an area that's going to be deeply desired by the world for many years to come.
And Duncan, any sense of how much you can sell and at what price? Just because this is, my understanding at least, it's a new thing, and the market may be struggling to put prices on it.
Yes, well, I mean, there is a price to it. There's a price on the screen today, but it's a relatively small market, and it's a really healthy price, a lot lower than we're designing for. I mean, a lot higher than what we're designing for at this particular point in time. And our approach to this, and by the way, the first thing to really remember here is that the components of Poly4 are exactly the components that go into all fertilizer blends that exist in the market today. So it's not that different. What is different about it is how it presents and how it releases into the soil and what it does for soil structure and crop yield over time. So with that, it means that it can blend into existing fertilizers, it can stand on its own, and we will make the market for this gradually over time. So we'll start in 2027, and we'll start building up to 5 million tons, after which we'll ultimately get to the 13 million tons that we've designed the mine to. And on that basis, there isn't any sticker shock associated with the impact to markets.
On to other things that are more carbon neutral, Duncan, and that is around the clean energy transition and all the metals underneath it. Are there metals that you're particularly concerned about in terms of the level of supply in the market? Because I know McKinsey, Traffic Europe, and others have given their assessments of metals that we might be short of in the decades ahead.
Look, I do definitely believe, and I've been saying for ages, that the demand for these metals and minerals is extremely strong fundamentally. The reality is that the supply of these metals is materially constrained, and there are a number of reasons for that, including the geopolitical status of the world, the ability to get permits for these projects, and the fact is that to the extent that these resources are available and they are taking so much longer to develop because of all of these constraints. And so the consequence of that is, I do believe that there is likely to be a deficit of these materials in the medium term.
Thanks so much, Duncan. Thanks for joining us. Uncle Wambler, the CEO of Anglo American. This is The Red.
So, got another search. This one is very divergent.
Welcome back. Bloomberg has learned that advisors to the UK Chancellor Jeremy Hunt are increasingly concerned that the Bank of England risks raising interest rates too much in the coming months. For more on this Bloomberg scoop, we're joined by our colleague Philip Aldrich, who's been writing this story. Phil, great story then. These are independent advisors to the Treasury, though. So in that context, how much does this represent a Treasury view? Therefore, how much should we think this matters?
Yeah, and it's a good point. The Treasury does listen to it.
So far, the trading stopped doing a nice job showing us when you're testing the trend line. I should take a long.
Are being considered by the
Nice to see it. It's going up slightly. That one stay flat.
views that obviously the committee, everyone prefers advisory committee is suggesting that the Bank of England doesn't need to go so hard on rate rises. It doesn't need to get to 6% or 504%.
And then price will accept 730 area.
As we've seen in the US.
Will drop there.
Yes, indeed. And I mean, there's a few ex-BOE policymakers on this council. They also seem well informed on the views of Mervyn King, previously, of course, at the Bank of England. What's the reason that they give for why interest rates might go too hard?
So there are signs that the economy is slowing. So the effect, so interest rates take a couple of years to cut.
Morning, Koltun. How are you?
Morning, going well. How are you?
There are signs that is
I'm here. I'm on top step
That's great.
because I'm kind of done. I'm done
Yeah, I saw
financially.
you done
Yeah,
financially. You trading a
top step.
top step now.
Phil, thanks very much
Yeah,
for the update.
only.
Philip Aldrich with the latest on that Bank of
So
England.
I saw that there was a level at 50. I just went short at 40, but I think I'm gonna get taken out right now.
I mean short than 44.3 again, but
I tried to get short there, but I couldn't. It was moving too fast.
it's look like the shorts they not ready yet. We quite overbought, but after move
Yeah, I
yesterday,
see that.
after the meta release data, and they really break all of they break the
Right.
last barrier.
Yep.
It's quite nice bullish session. So we'll see. As I don't know, did you saw it earlier? I marked the area, the blue square. It's where the bears will be looking after it to keep it.
What area is that? Because I saw that there was a level at well, what Adam wrote was 40, right? But that was yesterday. But I
Yeah,
figured it would still be the same thing.
753 is the top, the bottom of it. It's 735, so it's like 20 points area, and I hoping that they cannot pass that area, then the shots will be good. If they will pass the area, go back, then I will go
Mhm.
long.
Hmm.
I'm long with oil as well.
I was short, but I got taken out, so I haven't got back in.
Okay. My first TP on oil, it's just below the line. But I think so I should take it now, the first TP, and let it run.
But you're short or long?
I'm small contract short only one
Um.
contract,
Hmm.
but that don't look too good. As you can see, the
Yeah.
box is going nicely up.
Antonina,
Alexa, stop. The box is going nicely up, and we also very bullish. So why London wouldn't buy
Hmm.
just to get the piece of cake for themselves as well? Okay, took the first TP on oil and break even now. Let's see what NQ will do. If you like, I don't know if you was trading or watching FMOC yesterday, it was quite nice actually.
I didn't trade yesterday. You never know what happened. I was let go from my job,
Oh
so I
shit.
haven't traded. The councilwoman decided I was not fit for her. No write ups, no nothing. It was just um, she's a new city official, and I called Councilman Bravo, who hired me. He said, she let you go because you worked for me. That's what politics are.
Yeah.
It's kind of depressing because I didn't have. I mean, there was no write up, there was no reprimand, there was no nothing, there was nothing. But she's a new city official and council member, and that's what she wanted. She wanted a new secretary.
New
I
stuff,
wasn't.
yeah.
I wasn't fit for her. She said.
But yeah, as you
So.
mentioned, most of the time the politics is like that. When they changing, they're looking for the new stuff.
Yeah. So she's bringing. She let go of all his other people like day one, but I mean she kept me for a month. But yeah, so that's why Monday and Tuesday I didn't do anything. I was just like in tears and unbelievable and blah blah blah.
Uh-huh. Okay. Sorry to hear that. Now you need
But
to look for the new job.
yeah, exactly. Yeah.
Okay, YM it's really nice trending today, but I don't know what's happening with the NQ.
Picture in the banking space with
Mhm.
Barclays getting hit, and this is partly due to weakness in the investment banking division, as you say, but also the net interest margin guidance downgraded in the UK as retail
You could
customers
see
look
later
for
on
higher
probably nice
incremental
bullish around, but
deposit
I am
rates.
not convinced about it yet.
Mhm.
BNP Paribas going the other way, rising amid better than expected costs and also some outperformance in its equities division versus the fixed income unit. We actually spoke to the company earlier today about that issue. Here's what they had to say. The reason we see is basically the corporate clients we have, they have been able to adapt. Whatever we're seeing now in the economy
I
is
haven't
something
really
they have been
posted anything for
anticipating and
today yet.
adapting to. So the clients we see are doing well, and we don't see any pickup in cost of risk, and we confirm our objective to be below 40 basis points. So it's BNP Paribas there speaking about their equities unit, but we've also brought up Jupiter Fund Management here in the UK, rocketing up 18% in early trading. This as they see a better than expected assets under management. Retail trading looks pretty weak, but they see institutional clients boosting Jupiter. Meanwhile, I brought up DWS. This is the unit that was spun out of Deutsche Bank, the asset management company. It broke
Very
through
small,
earnings
very
as the
slow
upgrade
open.
over JP Morgan recommends buying that stock as their greenwashing probe looks to be concluded quite soon. Now, we're also going to look at some of the energy-focused stocks you mentioned. We did have Shell, that one weighing
At
on
least the
Tesla
oil
market.
going
We've
in
also
the
got
right
Centrica,
direction.
this one doing a share buyback as they continue to get a boost from British Gas. Neste,
Did the
the earnings
Treasury talk
concluded.
yesterday? What's
Nestle,
his name?
as I did when I
Powell.
first saw the drop on my screen, down 9%. It's
It was
up in
breaking. Can you repeat
industrial,
it?
but also chemicals. As I
Did
said, some
Powell talk
the big
yesterday?
ones
Did
there.
he
So
did
getting
he say
Yeah,
the
hike?
share buyback. We also
yeah,
got
he was talking
Or,
something. I did not really listen to him, but he was talking. I was just
just last month, we announced a
hmm
15%
in a zone of taking longs. As he's talking, it's really nice to
commitment we made. Actually, we're going slightly further with
take
a
some
15%
trades,
mm,
and I was long on NQES and gold, and then I was a bit
So
short on
Shell speaking
ES,
about their buyback, and
and
the
at
next big
the
trade
hmm
also in energy
after
with these
market
various subtypes
close,
on the screen. But we
I
also
open
brought
a long
Airbus here over
and
in the aerospace. Some clients related
Meta
continue
Facebook
to be the big issue
give
for
me
those
nice
companies. So
like
we saw
70 points.
Rolls-Royce and also the other supplier Raytheon in the US this week. They were
Nice, nice.
down 2% over in Paris.
It was quite good day yesterday.
Stocks I mentioned, and Nestle with an L, that one up 2%. Strength in the old classics like Kit Kat, Nespresso, George Clooney's old favourite, those doing well. Meanwhile, Universal getting that jump, Taylor Swift still boosting sales. Teleperformance, this is a services company,
Yeah, it's
outsourcing
quite
company,
overbought
short sale
now.
target, down 9%, weak earnings, and Ocado finally trimming at
How
25% surge yesterday as shorts were squeezed out. That's coming down. Ocado is one of the worst performing stocks in London today, Anna.
Yeah, really volatile on Ocado. Joe Easton helping us to not confuse our chemicals and our Kit Kat. Thank you very much from our equities team. Joining us now with her take on the earnings story so far, Virginie Massenet, Global Equity CIO at Allianz Global Investors. Virginie, nice to see you once again. We're into earnings season, aren't we? It's busy. It's been busy this week, and it'll be busy again next week, I think. And give us a sense of the themes that are coming through for you. I mean, a couple that stood out to me is the different takes we're getting on China, or the sort of insights we're getting on the China growth story, and the different performances of consumer-facing companies depending on which segment of the consumer they're facing. What are you taking away from this earnings story?
Yeah, so in terms of themes, I think what we have really in the markets now are finally not anticipating a rate cut in the second half of the year. So the two questions are really around the disinflation boom that we're seeing. Is it going to continue? Do we have a recession or a slowdown? And another way to say it is good news is bad news. So are the companies delivering good numbers, if you want, now ignoring potentially a slowdown? We have destocking, we have inventory movements, we have currency movements, and of course, potentially a high increase in the cost of debt. Now, on the global basis, if you want, China clearly is on the path to deliver 5% GDP growth. And I think, as you can see with what was announced this week, they want to support the economy, but they're doing it in a very measured way because they are very concerned about going back to large packages that paid with so much excesses the last time around.
And on that increased cost of debt, Virginie, would you expect more businesses in Europe over the next half year to present some level of a higher level of distress in their balance sheets then as a result of this?
So this is something that we're doing a lot of work on right now. Interestingly, in terms of refinancing, there's not a lot of money coming, and a lot of companies are taking debt on a fixed basis. And in fact, 75% of non-financial debt in America and Europe is on fixed rate. However, for companies who will need to refinance, will have a big step change.
They try to push the price through.
For Europe and America, from 68% to 90% of their combined GDP from before the crisis. Interestingly as well, some of the companies that we're talking to are benefiting from rising rates because they've got net cash and fixed debt. However, you have to be aware that in that refinancing, for companies who need to issue bonds or take new debts, there will be a step change in the cost.
And one of the things you focus on, I know, is energy transition, climate transition, Virginie. We spoke earlier to Shell, and I was asking what message we take away from the fact that they're paying out big money to shareholders, and does that mean investors are not so keen for them to invest in clean tech? He says, no, they're doing both. But I wonder if the money is getting to those clean technologies, Virginie, and the scale that is required.
Well, as you know, it's been a theme for a very, very long time for me, and I think the money is getting there. What we're saying, though, as investors, is you have to be very careful about which part of the supply chain, if you want to buy into. If you look at solar, for example, with China being a very strong player, you have in some way some of the capacity. So we are now talking about the infrastructure that helps us get to that next stage of development, and we're finding some opportunities there. And of course, the key thing is to see what Europe is going to do to counterbalance the IRA program in America. So I think over the next 10 years, we'll see a lot of capital going into that area.
Okay, and is there upside for stocks if we see specific parts of the stock environment, if we see more detail on what Europe plans to do? Because I think we've heard something
61. Okay.
to the Inflation Reduction Act.
Yes, exactly. And I can't name companies, but if you think of adaptation, infrastructure growth, there will be a lot of companies in Europe and all around the world that will benefit from that. The key also is cost of capital. Going back to that cost of capital, we're not going back to a
contract to my shorts.
You added a contract to your short?
Yeah.
To understand it's not only about plugging AI, it's about having the right mindset, the right
I don't think so. I got the stop at 70, and I don't think so. We should pass the 64.5 area.
You have your stop at where?
70.
Oh my God.
But the 64.5, I hope so. We won't pass it. And my second entry was at 57.
Mm.
Now I'll be looking for 60 points.
Okay.
Again, completely contrarian trade.
I see it. That's if, right?
Now even bonds and everything it's green except we creating divergent after divergent. But we got a bullish market or bearish
Mm-hmm.
market when you catch the time divergence don't matter. It's only the area which I am interested.
Is expected to hike rates, but how high will rates need to go, and how fast will they get there?
Oil.
Catching up. They want to hike and show strength when they actually should show caution.
Bloomberg Television and Radio brings you the breaking news from Frankfurt and detailed analysis after ECB President Christine Lagarde's press conference.
Yeah, it can dawn the ECB.
Those questions will persist up until Lagarde goes on that podium.
Coverage begins today on Bloomberg, your global business authority.
This is markets today, 43 minutes into your European trading day, and the European picture looks fairly buoyant actually. A bit of a recovery in the FTSE as well, which was negative earlier on in the session. Now all in positive territory. Fed helping, tech earnings, the domestic European earnings story helping as well. Thinking about where we go on the central bank narrative, so yesterday was all about the Fed. Today it's all about the ECB. The central bank
And building the orders.
with a quarter point hike all but baked in. The meeting comes after disappointing PMI readings earlier in the week, as well as a bank lending survey that showed plunging demand for loans among companies in the euro area. For more on this, Maria Tadeo joins us from Frankfurt, from the ECB, in fact. And Maria, the decision itself then widely expected. So where's your focus going to be today?
Yes, and we're expecting another hike, another 25 basis points hike from the ECB. That should take that deposit rate to 3.75%. And Anna, for two very simple reasons. One is the head of the ECB, Christine Lagarde, she already indicated that She pre-announced it in the previous meeting, repeated the message in Sintra, and then of course we had that core euro area CPI print that came in for June at 5.5%. You put it all together, it takes you to this 25 basis points hike today, but the focus will be in the future, will be the press conference, and it will be about September. And up until now, in every press conference, we had a Lagarde who really wanted to reiterate and repeat, we're focused on inflation, we're restrictive, but not restrictive enough to play the tough central banker. But obviously, when you have weaker economic data,
What do you
you're
think? You think it won't pass 65?
a lot of this makes that bravado
Don't know, no, sir. It's really, they're very bullish. It will be my last attempt to short it for
decides to
now.
be more neutral. They have a lot of data that they're looking forward to. There will be new projections after the summer. Will they indicate we're just state into dependency, no actual bias, one way or another? And just very briefly, Anna, to me, I'm particularly curious too about the
Because
idea
as you
of
can
rate
see,
hikes.
even on
Because
the
many questions
search,
about the market
we've got
perhaps
a
expecting or
pullback,
anticipating
a
rate
small
cuts sooner than
pullback, and
expected,
go
pushing
again. And
prices
each
to
time
negative
after the
and shutting
pullback, we're
down
making
banks.
a
WEC in
smaller
December would be pushing
surge,
up target
but the
to
price going
about
Mhm.
higher.
sooner than expected rate cuts in
Right.
September
So they're
2027,
hugely
or
overbought,
will they decide to put that debate to rest?
but they don't
Maria,
care
thank you very
about
much for
that.
making Maria today in Frankfurt. Let's dig further into this story with Anna Stupnitsky, global macroeconomist at Fidelity International. Anna, thanks for your time this morning. So let's think about the ECB and where it heads. As Maria said, 25 basis points is the expectation for the hike today. So the focus then turns to September. How are you expecting that sort of forward outlook from the ECB to look today?
Yes, it's going to be an interesting meeting, Anna, because the ECB is looking at the economy that is clearly weaker even than what we saw back in June. So the trade-off between growth and inflation is much sharper now and sharper than what the Fed is looking at. So how they change that signaling about the level of rate from here, but also
Same as the gold
duration
pushing the price and then
of
keep going
rates
higher.
remaining high and this restricted
Mhm.
territory is going to be so interesting. What we're focusing on today is the three tests
Yeah, we're
that
already.
Christina got laid out earlier this
67,
year
80.
to assess whether policy is restrictive enough. If you remember, it's inflation outlook, underlying inflation, and the strength of the transmission mechanism. And I think the third test is being met, given this weak lending survey that you mentioned and weaker PMIs. So that's something that we're watching whether she will confirm that.
Yeah, it's interesting. I was going to ask you about that ECB report around lending to corporates. It showed the biggest drop on record. I think it goes back to 2003. It does really suggest reduced demand for
They don't care
some
about
corporates.
something
And
like
one of the key
overbought.
stimulus for these strategists earlier on suggested that, 75%
Not
of
right
the
now, but
corporate
I
creditors
mean,
analysing are
It will
actually
drop,
it's
and
very
it will
poor
drop
ratings
nice
of
and
ECB
quick,
finance in the short term.
probably
So
without
I'm curious,
us.
to your point, how much that transmission is getting through.
Well, that is the main question, really. And as you know, the strength of the transmission mechanism has been in question this time across developed markets more generally, and partly because of, well, of course, because of excess savings that we had accumulated during the COVID, so that has been driving demand, but also structural changes to the debt market, to the mortgage market, where a lot of debt is on fixed rate. So that transmission is not getting through. And I think in Europe, it's probably less
Fly
severe
and
impact
fly,
on the real economy, but there is
one
definitely a big
direction.
issue for the US and for the UK as well.
hmm
So thinking about, so we've been through the three tests, and thinking
Wow.
about how long the ECB pauses after hiking, Anna. I mean, well, firstly, are you expecting another hike in September, and after that, does it pause, and if so, for how long?
We think that today's hike might be the last one, but the risks are skewed to the upside, given that the underlying inflation test has not been met. It remains strong, as we
It
saw
really
with a
look like
number
the
of
gold
core and
going higher.
underlying
Thank you
measures.
very much, the
And
gold.
of course, the ECB will be focused on that.
We're
So
testing
we
very
think
expensive
that
area, but
another hike
Very
before
much
the end of the
expensive
year.
areas,
And of
way,
course, the most
way
likely scenario
gone.
that the rates will stay
mm,
higher for longer in coming months, at least for the next few
Is
they
months.
that what
don't.
happened on
And
Tuesday?
what happens
Yeah,
exposed is a
It
different
just passed
question.
and
Will
kept
they
on
start
going and
to
going.
implement a rapid course correction
yep.
if the economy slips into a deeper recession?
means they will try to signal that they are determined to keep policy in restricted territory for a long time. Anna, do you think the Eurozone economy is in recession right now? And if so, is hiking into it going to be seen as a mistake in future?
Well, we think it is probably slipping into recession. Yet a number of indicators suggest that
Yeah, we are
certainly Germany
very over
is in
it,
recession. Again, it
Mm-hmm.
depends.
but still the
Well,
line
is this
can
one
catch it
a
up.
policy
So
mistake? We think that
they
inflation
can
is strong enough and underlying
buy
inflation is
much
strong
more.
enough to require a recession
They can
in
buy
order
much
to reach
more.
better targets
Yeah.
and to prevent inflation expectations from the outgoing. Central banks have to drive their economies into recession. Of course, the ideal outcome is that this recession is mild enough and short enough for the inflation to fall. But actually, what we are worried about is actually potential upside shocks to inflation again from here. Given the potential weather-related disruption, El Nino, we have that weather, hot weather moving to the northern hemisphere, and also the shocks from the Ukraine war and how that the grain flows, whether they are sustainable or not. So I think that is actually a big risk, the upside risk to inflation from here, and that means central banks will have to maintain that hawkish bias.
And so, with that in mind, is it a focus on soft commodities and the prices of those that we need to keep in mind as we head into the second half of the year, Anna?
Oh,
If we look at the agriculture,
okay.
or food indices, I was looking at
Don't fight it.
actually the food
Just if you wanna short,
indices
wait.
I
If
did.
you
over the past
if you
I
wanna
did. But
in those
if
food
don't short
prices,
it now.
and
If
that
you
is
wanna go long as well, it's too late now. We need to just go back at least to something like 55 area.
mm-hmm.
But no, I don't care about MQ. They can do whatever
Well,
they want. I managed to flip my oil and I am in short on it, which give me the profits, which I
mm-hmm.
lost on MQ. That was really nice short, as they proved me they couldn't make a new high. One contract done, second one still in go. 79.68 was my entry.
Well, that sucks.
And oil after a nice night ride. Oh, let's see what. Okay, the gold start to release a bit, but MQ it's still very bullish.
Mm-hmm.
Yeah, that was very nice buy, showing how bulls
For
are
where?
strong. From the open of the London or even open of the Frankfurt, we was bullish all the
Oh,
time.
yeah, no.
So the bonds changed green here. This was a nice entry on the open of London. After open of London.
Mm.
So the bonds changed bearish, but price changed to bullish. Okay, the gold look like it's done. Let's let them killed, you know.
markets today. 54 minutes into your trading day, and it's a positive picture overall for European stocks. Let's get the individual movers. Joe Easton has a briefing. Joe.
These are the gainers in terms of those companies reporting earnings. So firstly, BNP Paribas, the French bank, rising with strength in their equities unit, outweighing some weakness in fixed income, really showing Barclays how it's done in terms
I
of
was so
investment
tempted
banking.
to open that short, but no,
London-listed one
not
actually
yet.
downgraded its growth forecast due to
For where,
weakness in
NQ?
China. But this stock
No, no, but I'm not touching it now. As I told,
No.
leave it them to play the fight.
raising the prices
Mm-hmm.
for consumers, not yet cutting back too much, although in the Eurozone, some slight weakness in volume, but overall holding up pretty strong.
Short on oil is good.
The pharma company listed in Switzerland, we haven't touched on that one yet, but that's a $250 billion company.
So discards on oil, they're covering my loss on NQ.
Most of their focus
That's
is,
good.
of course, in cancer, where they continue to be a real European powerhouse, and that one edging up. Pretty big move in terms of the size of the company. In terms of the losers, then Barclays, the big decliner in the UK, down 6%. As I say, weakness in investment banking, but also in UK retail, where they have downgraded their net interest
But I
margin
saw
outlook
other
due to
funds
customers trying to
probably
find
have
higher rate
retracement
interest
on
on their savings.
oil.
Volkswagen underperforming the peers. The markets over in Italy jumping today, given some strong earnings, but Volkswagen falling behind on the electric vehicle space, losing out perhaps
Okay,
to Tesla.
if not
So that one
NQ,
down
I will short YM.
Meanwhile, Shell, this is 8% of the FTSE 100.
I'm not touching
Second
NQ
highest
because
stock,
it's too
down 2%.
expensive, and to short YM, it's much cheaper. Risk to reward
Thank you
is
very much for that,
better.
Joe Easton, with a briefing on some of the
Uh-huh.
movers today, some of the gainers and the losers. Overall, then stocks moving higher here in Europe, up by 0.8 to 1%.
650. But
Because YM is very expensive now, and
I know, but expensive. That's why I thought if it's very expensive, we could take a short on the very expensive. That's what I haven't figured out.
I know, but not always it will work as we want. And this is NQ is expensive to play, so you can choose the market where the contracts they don't cost you as much.
Mm-hmm.
The reward is not the same. Actually, yeah, one I will take contract on 50%, the second one I will go a bit further. Yeah. Contract short on YM, $50 and plus already, so it's good. Yes, start the drop. Gold as well.
Mm-hmm. What the hell just happened? Oh my God.
MQ try to go higher. This is why I'm saying not touching
Cancel,
it now.
cancel offers, cancel all. Damn it.
Candles are white, so there is
Mm-hmm.
really nicely was breaking all the support with the white candles. And exactly from the level where they should switch on to break it. RTY going higher, same as NQ, yes, trying to as well.
A very good morning and welcome to the Pakistan Managed Premier in Dubai. Here's what's coming up on today's program. European stocks and US futures gain. Speculation is the Fed is close to the end of its tightening cycle after raising rates to the highest level in 22 years. The focus now shifts to the ECB. Investors price in another hike. The economic data is looking weak. Will it be the last? We like to Frankfurt. Plus, about the day for buybacks, Barclays, Total, and Shell.
Oh my
Today we
God.
got a bit of the news as well, so we need to remember about that.
Mm-hmm.
And Roche, all coming up
Okay.
in the next 60 minutes. The map is live, the prices are there, and this is what we've got for you. It was a bit like the Field of Dreams if you listened in to the Fed meeting last night. That was 1989, it was homage to American dreams. And here we are, a homage to the end of an ECB rate hiking cycle as we see prints of green all across the spectrum. Shell doing a buyback of $3 billion. Where will Barclays take you next as they warn that you are near the end of that Nirvana, which is NII, net interest income, and the trading funded by 41%. Barclays doing a buyback. So you have buybacks everywhere from Total, Shell, and Barclays, all having various impacts across the map. But I want to take you to the position there. Shell down nearly 2% on the open. This is some of the concerns in the oil majors have about the outlook going forward. Now, if you want to understand the challenge for the ECB, and we'll catch up with Maria in just a moment, Barclays down 5.5% and change at this juncture. This is the lending situation. Robin Brooks on Twitter last night talked about the lending squeeze that there is. In the United States, there's a 2 standard deviation tightening, and in Europe, there's a 1 standard deviation tightening. It's picking up. Is it time to stop hiking with these kind of crunches in terms of credit standards tightening? It will transmit to the real economy. Let's have a quick look across the asset classes, because if you're a bond trader, you heard one narrative from Jay Powell last night was that we may go into pause land. However, JP Morgan think that you're going to have 9 months of a pause. What does that do to the short end of the curve? Do we stick at this kind of level? NYMEX is up by 0.8%, as the survey at Bloomberg 15 out of 22 say Saudi will extend its unilateral capital to inventories drawdown at Cushing. You have the dollar dropping. The barrier for the birds has been removed to a certain extent.
The hell?
Yes, going
Me?
higher.
Just indicated where they are with end of year inflation. They estimated to be 58%. 58%. We know they had a huge inflation issue in Turkey. There we go. But they are moving from unorthodox policy to more orthodox policy. From 22.3% is where they are. Dollar up, lira down, a smidge at the moment. Let's reflect on the Fed. Across the assets, this is what we've got for you as well. A little bit of movement in the weak market. We're down with the biggest move down in 9 months yesterday. You're also seeing those 2-year yields move ever so slightly lower. Let's reflect on the Fed. It's done. 25 basis points. And the chair of the Fed, Jerome Powell, left the door open to more increases and said they would be, guess what, paper dependent.
We haven't made a decision to go to every other meeting. It's not something we've looked at. We're going to be going meeting by meeting. And as we go into each meeting, we're going to be asking ourselves the same questions. So we haven't made any decisions about any future meetings, including the pace in which we consider hiking.
I don't know whether I go as far as Sid Shaw to say it was a yawn, but it was pretty, insipid forward.
I lost everything.
Job well done.
Why you try to short it? It's like so bullish, and they're showing you that they try to go higher and higher. You just
No,
need
I'm
to,
saying
you just need to
they
really.
I lose internet.
Internet, okay.
Yeah.
Because I thought so
I
that
was
you
like,
lost the
what the
account.
hell just happened? No, I haven't lost the account. I'm down 100 and no, I'm down 200. But
We've got some like a TP signals and everything, but they the last TP signals, they just damage them, they run through them like there was nothing.
Mhm.
And yeah,
Oh
they're
wow.
making another new high.
Uh-huh.
Buy oil trade
Well,
as well. I think so. I will close the second contract because don't look like it will run.
We're not there yet, right? And the jobs market remains strong underlying. So I think there is a lot of questions still to answer in the Fed. And I think that's why Powell does not want to commit. And I think it does take some of the excitement out of the Fed meetings because, but at the same
yep.
time,
I see the long at
So
710.
I think it has actually
Oh.
become a lot more
Hmm.
healthy trading environment for traders.
We have many chances to join the long and we didn't, so now I will just wait.
Well, of course, depends which group of people you speak to. Eddie, thank you very much. Between the bond and the equity traders, Eddie Vanderbilt, Alan
Okay, I close my short on oil. Maybe a bit too early, but I prefer secure contract.
Mhm.
If you're a meat-eating bond trader, you heard pause.
If we start arranging this area.
You heard soft landing. What did you hear?
Yeah, absolutely. I think that the market really needed to hear a lot more emphasis on potentially an additional rate hike coming for their to push additional increases in rates from here. But what we heard from Powell is actually very balanced. And in fact, the word balance came up 13 times, having come up just 9 times at the last meeting, 7 times the previous one. So he had a lot of opportunities to actually push the market to price in a little bit more hikes, or at least to price out some of the cuts implied in 2024. But he did not, in particular, he did not.
At least YM, it's nice, stabilized. Two contracts.
Really?
Yeah, I am $110 plus on two contracts.
Nice.
I risking
IM is not that
300.
wild. That's
Yeah, I risking 300 to make 800. So this makes sense for me.
yes, sir. Any day.
Big shout out to Robin Brooks at IIF here. He flagged it in terms of the standard deviation, the scale of tightening in credit conditions in the United States and in Europe. When you look at the constriction of credit,
And the oil going lower.
That now it is important to pause and reflect and let the
Too
long
early,
variable
that's
lag
okay.
take hold in both the US and in Europe.
I think when we look at actually the lending.
So I just cash out on oil $200 here, and if it will come here, it will be 680. I want to see if it will go my way or not.
Tightening as a result of all the tightening that has been delivered. We've had 400.
You can see we cannot stop NQ.
Well, then I should have gotten long.
Yeah.
But I don't know where to get. When it's like this, it's hard to get in.
Now yes, but it was easy for me to get in at the Frankfurt Open, and I got into
You
the
did
short.
get in at the Frankfurt Open?
I got into the short at
Oh.
Frankfurt Open, and it gave me like 20 points. This is why.
Mhm.
It make a trap for me.
Mhm.
Well, I suppose it's a question really of trying to tamp down inflation and demand without breaking the system. Stay with me. We're going to pivot to the ECB. We have that decision today. As you know, President Christine Lagarde is expected to follow in the Fed's policy footsteps, I should say. With 25 basis points.
We broke the previous. We are very hugely overbought at higher time frame. So okay, so now I need to wait for the moment of weakness for the new high now.
I know you caught me there. You caught me, but you're outside. 25 basis points, but how many times do you think she'll go with balance? Do you think she'll match and meet Mr. Powell? Good morning.
Look, it's always a balancing
No,
act.
I'm so tempted to press it, but no.
She makes it official, but
Why
you know
am
it.
it
I know
enough?
it. Probably anyone who owns a Bloomberg is ready for a 25 basis
I
points
can
hike
sell ES.
today.
Oh.
Of course, two simple reasons behind it.
House, yeah.
Announced it, repeated that message in Sintra, and then of course you had the core inflation print that came in for June at 5.5%. Obviously, you put it together, it takes you to that 25 basis points hike. But a lot of this, as you say, will be about the future, and it will be about September. And you've talked about it.
Need to sell. Yes, I've got a bit more sense as
Obviously become more of a flashpoint.
it won't cost me so much.
This is still an economy that's not able to catch a breather. There's a perennial question about monetary policy
RTY,
and the lack
it's
of it. When do you
this
know
is what's
enough
pushing it
is
up and
enough?
up.
And you put all this together,
Gold
you could argue
start
there
to
is
drop.
today an incentive for
Mm-hmm.
European central banks to
That's how
actually
you
increase
both
rates.
starting to drop. Will NQ drop too?
Bias either way and refer to the
As far today morning, what I noticed, the gold was going up first and then NQ was going up after it. But
Mm.
gold started drop and NQ not doing anything, so you never know. RTY going higher and gold not doing anything. The NQ not doing anything, but this is why I short on ES.
Mm-hmm. You're shorted ES?
Yes.
Okay, well, let's hope those nightmare scenarios don't come to
For NQ, I just need to see that they showing the weakness.
My guest is Stuart Salem, head of European rates strategy.
I am short ES and
You make it
YL.
very clear that we'll have a
And
little bit of
both
a
of them they
shuffling
doing
act
so
at the
so.
short end of the curve, but the real action will
Okay,
come
why I'm doing
in
so
the
so
belly. So looking
ES.
across the curve, the boom, the bottom, the chance
It's only minus 20 bucks, so that's okay.
perhaps the most performance. In what way?
And as well as two contracts in each.
Absolutely. I think that when you look at pricing in the front end of the curve,
Oh,
it is
yes,
actually
going
implying
higher,
a
minus 70.
terminal rate just under 4% and a first rate cut by the ECB in the middle of 2024. I think the ECB might be comfortable with that.
What did I do on this practice? I don't know what I did on practice, but it's really annoying that I did that.
For example, there is
Oh my God. I had a limit order and it's up. And how the hell did I do that in practice? Where did it get in?
ECB sources for the moment that try to correct
I don't know, but it's freaking up.
and the nightmare scenario that Maria was
The practice
pointing to
session.
pricing and disrupting.
Yeah.
However, where the ECB may
I
have
had an order, but I don't see. Let's see.
1 second, Victor.
Ow! I don't even remember doing this.
An hour.
1572450, and then 15743 is when I got in over here. Oh, you know what? Oh my God, I can't believe I did that.
Upgrades its full year forecast. We speak to the Deputy CEO, Jean-Jacques Morin, who joins me next, right here on the
Oh, and NQ it's like really not stopping, just pushing and pushing higher. What they buying? Okay, it look like today morning there was just nice huge buy of Apple,
Mm-hmm.
Tesla, a bit of the Google, Meta after yesterday very small. Yeah, all of the stock just added up a bit. But we got a very nice drop on gold and I missed that. That's okay.
How the hell did I do that? Why did I get in there? I don't understand what I did here.
Gold is amazing actually. It's just touch my. Oh, okay. Bit too late to get into that short. Now we can see even no bells showing at all. The NQ is just going higher and higher. Everything was nice and green all the time,
Mm-hmm.
showing us only divergences, which mean wait for your entry short. Soon as I will see the weakness on the isolator, this is when I will be entering short. Not earlier than that.
Where and how do you see the weakness?
I wanna
Damn, where is
see
that? This is what gets me confused on that box,
a
that
purple line
overbought. That
here.
let me go back. Purple line where?
On isolator here, purple or red. It's like if I will see something like that, it means that this is the weakness, you see? When the line change from the green to purple.
The deputy
Hmm.
CEO of Apple, as long as I good to have you with me. A very bullish call on the red part. It'll up 15 to 20%.
Well,
And EBITDA also a strong guidance. Where are the strongest markets at the moment? Where is the biggest and most robust demand?
You know, the publication we went just through as being an additional quarter of, I would say, increased performance. Since 2021, every quarter is getting better, and Q2 is no different. Q2 is better than all the other quarter. And the short answer is that every segment and every region is doing extremely well. But the one with really leading in terms of the rebound in Q2 is Asia. You know that the recovery in Asia was like probably 12 months, the recovery from the other region, and hence you find a very normal phenomenon by which now that Asia is reopened to travel and the COVID in China is behind us. I
Ooh,
think
that was a
you
nice
see
huge buy on
naturally Asia will be
ES.
back. But I must say,
800
in the
contracts
equation of
against
Middle East and
70 for
Africa,
sale.
besides
what? 800 contracts.
But not now, it was like a few minutes ago.
it's across all
On
the
ES,
Asia.
Wow.
And when I got up with Sebastian in Qatar at the new trophy assets, it was pretty obvious
they
that
still
we had
buying.
enough capacity to sell the super rich, of which I'm not.
The same would
Where are
happen
you on
in
that
a
capacity?
night.
Do you have enough mid-tier capacity, upper-end capacity? Talk to me about the constraints and what you need.
Yeah, Sebastian obviously depict a picture which has not fundamentally changed in a couple of weeks.
What the hell?
Probably
Don't sell it. Why you try to sell it?
behind the peak of 2019.
Just wait. Stop Texas. You need to be more patient.
When I was talking to you about the improvement of the
I'm not.
performance, really the first driver has been pricing.
No, I'm looking at the billing because my internet's stupid, right? And I'm looking at my billing for Top Step, and it charged me 2 times for the reset. So one never got used. Do you know what I mean?
Uh-huh.
So I need to call them tomorrow or whatever time they open, because one's never been used because it like charged me back to back. And my bank just sent me alert. My bank said, "Did you use your card to do
Twice.
top
Mm.
trader?" So it charged me 2 times. That's what
Okay.
I'm saying. And I put yes because I did do it, from the fraud. So
Yeah.
the car, it did it. No, I can't afford. No way.
And we are
Oh my
planning of being somewhere between 15 to 20% in terms of FPAR, but at the top of the
Oh,
15
and I
to
didn't get that
20%,
code. And if
which
I
is
did get that code, I
very,
never
very
got to
nasty.
use it because I
But I
wasn't
give you the code.
trading.
You should use the code which I give it to you.
It doesn't let you because it was
No?
supposed to use it by the
By
3rd.
Sunday, yeah.
No, and I didn't. I wasn't trading at all.
Okay.
Are you seeing any drop-off in bookings?
And my internet, I don't know what the hell is wrong with it, but it's
Not at all. In fact,
really sucks.
the demand today is amazingly strong. We are first month into summer, and the situation is
Yeah, so far no sign of the weakness.
quite difficult in many places. But I can tell you, this summer will be better than 2022, and 2022 summer was the best ever. So I think you will find out that summer will just be incredibly strong, and we don't see nothing of those effects into
in exclusive talks with Hotel and Shuffle. Is that the strategy for you, Sebastian, which is major trophy assets rather than mid-market volume cars?
So look at all those white candles you have.
Yeah,
You're right that
yeah. This is
Oh
the
my
best.
God.
This is the best candle to break the areas. And as we going up, they still printing.
experiences which are unique and the stuff that providing
Now just waiting for the sign of the weakness. The bears they step in on a surge, but nothing happened. We've got another divergent there, but this don't mean anything to us.
having them as part of family, if you will, is a really offer even a big share in what we call lifestyle, which is as
It's definitely it was much easier for me to sell the ES because yeah, I am now on minus 100, but it's
Oh
not
my God,
as
look at that candle. I'm not in it, but look at that candle. It just like,
yeah.
which is what we've done for 50 years, which we call premium economy, which is based on very
oh my
iconic brands like Ibis and Puma. And this one we continue to nurture. This is a very stable base.
So would that be a pullback so we can go in long?
We've got really strong
I don't know. I am just now beat up to myself. I closed the oil. I couldn't handle the area as they was struggling there. Quite a drop will happen.
Mm-hmm.
Same with the gold. I didn't open in on gold when it was showing nicely that it should be a sell. At least YM start the sale. So MQ, can you
Mm-hmm.
show us the weakness? Or I can open 2-3 micros.
Where's the weakness? Do you
Okay,
see the purple?
I got.
Show me.
No, I will get a 3 micros short. But wait a second, because we had a huge sale, big sale volume,
Mm-hmm.
and the price will go up a bit. Go up. Yeah, no, yes, start the run up. Very serious.
See, I should have gone long at that little pullback.
Yeah, I'm in short
Okay.
with three micros. My stop loss is 25 points because I don't want to just keep buying and keep selling.
Mm-hmm.
And my first TP, it will be here at 40 points. Yeah, when I wake up, instead of looking for it's 100 points up now, the price from the time when I sit on the front of PC.
Mm-hmm. Wow.
God, why are you doing this to me? It's all going down without me.
I
Such a
don't think it
mess.
wants to drop.
And this is why I got only 3 micros. We got a big sell volume. After the big sell volume, we react to it with the buy, and there was very big buy volume. And that
Mm-hmm.
was, I think, so nice entry short. So far, I'm 4 points in profit.
to big results, big buybacks. Despite the drop in profit at Total, they are holding their nerve. They are delivering a $2 billion buyback in Q1 and Q2, despite their second quarter profit dropping by nearly 50% to just under $5 billion. So down an 8 to 1%.
Okay.
The brutality came from Shell. They announced a buyback of $3 billion. But of course, this is a tough time. Quarterly income, 5.07 billion, down from 9.64. They're skimming off the top on capex. They're trimming $1 billion off capex to 23 to 26 billion dollars. Coming up, the Rush delivers their profits. We talk to the CEO in a post.
Yes, pushing the price as well.
Seven, 7.
RTY, it's really unstoppable. It's so steep, much, much more than NQ.
Yeah, I don't think NQ.
RTY is a new high.
European stocks and US futures gain on speculation. The Fed is close to the end of its tightening cycle after raising rates to the highest level in 22 years. Focus shifts to the ECB. Investors price in another hike. Economic data is looking weak. Will it be the last?
Okay, I've got some liquidity area here. We'll retouch it and we'll see if they will help us or not.
Okay.
Good morning. Welcome to the Pulse Finance training in Dubai. Rallying call instead of drinks for all my friends, it's cash for all my friends in the form of buybacks. So we're in this eye of the reporting storm. And pharmaceutical is on the agenda, and Switzerland's Roche, the profit stepped down just short of the estimates in the first half. That says new drug revenue at the Swiss pharmaceutical company failed to offset the disappearing market for COVID-19 tests and treatments. The CEO is Thomas Thomas, thank you for being with us. We're all conversant with COVID ending and that lump being taken out of your results. But you have had challenges in cancer and Alzheimer's drug failure. What is the gravity of the situation for you? Is this your sort of low point for Roche? Good morning.
For the invitation. As you mentioned, in the first half of the year, we had really fantastic growth of our base business, meaning excluding COVID of 8%. We all knew the COVID pandemic will end, and that's why we also included that in the guidance. In fact, that's what we saw in the first half of the year. And this growth is really driven by a strong portfolio of new medicines. We've launched 20 new medicines since the end of 2015, and those are going to carry us to the future. And also on the diagnostic side, we've had very strong new launches of new innovative instruments and tests, and many more to come. With that, we're very confident that we'll continue to grow, especially after this period of where the COVID
Scalping line change red, that's strange, so quick.
Do you think there is a disconnect, Thomas, between what you've just said to me and what the market believes? I look at your stock's performance, 400 Swiss francs last year, 271 is where we are at the moment. You're underperforming your market and your peers. The market does not seem to believe that you have the right combination of future drugs. What do you say to those people who think you lack the pipeline that you need to deliver blockbuster after blockbuster?
Well, first, we probably got opposites in the share price also from COVID. And as this washes out, the underlying performance will shine. We have these 20 new medicines that will continue to drive growth. And we have a number of very interesting new medicines in the pipeline. Tiragolumab in cancer, just to name one. Giredestrant in breast cancer. Fenebrutinib in sclerosis. We just done this deal with
This tempo, they won't go anywhere.
Which takes one
Mhm.
people in the world, 80% of them have not been completed. So we have a number of very interesting medicines. Again, this year we're going to launch 2 new medicines. So we see that our pipeline is performing, and I do believe that as we continue to deliver positive results like we've done this year, throughout the year in the different trials, that this will also be reflected in the share price.
Okay, so you're asking for forgiveness and time?
I'm just saying that I think we have a great pipeline, we have a great unlocked portfolio, and once the COVID effect washes out, this will be seen, and we'll continue to deliver on our pipeline, and that will be then also reflected in the share price.
So with that ambition in mind, and that's a very clear message, and I get that, which is the pipeline is fine, it's firm.
Still making you high, why not?
Do you say no, manufacturing, go and buy a new pipeline, and organic all the way, or will you hold the option to buy pipeline?
It will always be a mix. It's been a mix in the past. We've always been looking also at external opportunities. When we look at hundreds of companies every year, and we decline 99.9%. It has to make sense from a scientific perspective. It has to make sense from a financial perspective. And as you've seen with the deal that we made with Alnylam, we are open to medicines coming from the outside. But we are looking at transformational, best-in-disease, first-in-class medicines. And this is one of those opportunities. And those are the things we're open to at the right price.
You have given some guidance a low single-digit growth. Is that, again, I sort of reflect back, I want to benchmark where you are and where you're going to. Low single-digit growth for this year, but what would be your ambition going forward? Is that a low point in the guidance?
So we don't give out any guidance for the next years. What I can say is
the
that
TP will be much nicer if this will work.
Washed out 2.7 billion.
Because I will be looking for 170 points.
We guide that for the full year that we'll have a 5 billion COVID effect. With that, 80 to 90% of our COVID sales will be washed out. So the last effect will be in Q1, and I do believe that the underlying performance will be more visible.
I looked at your shareholder roster, BlackRock, Vanguard, Norge. You're very well insulated. You have some of the best people in the world on your roster. But are you receiving pressure from any of your institutional shareholders for something a bit more radical to happen at Roche?
In pharmaceuticals, you have to take also certain risks, and that means we have to invest into new medicines. And at the end, only one out of these 10 medicines makes it. And people that are investing into pharmaceuticals, they're all aware of that, and they know that you will have times where you will have failures, but at the end, you know, as
I missed such amazing sale on gold. Looking for this stupid NQ again.
81 potential enemies. We are
Okay, I shorted at 95.
so I'm confident
I
I'm
had
sure
already lost some money.
I'm short with micros, but that's not what I'm looking for. Okay, but that's a nice thing. We got really very small search now. Maybe I'll.
I have one at break even and one at profit at 9.
Okay, I'm going to contract short now. With the mini.
Oh, the purple thing you're talking about, do you see it? I don't see it yet.
No, but the search here is so small.
Sorry.
Bless you.
This year will make more than 2 billion Swiss francs. Last year, we just launched it. It transformed standard of care. You look at
Minis, I
Ocrevus,
want only
strong
15
growth
points.
driver in multiple sclerosis, revised standard of care. You look at Hemlibra, it changed the standard of care for people with hemophilia. So that's our goal, to deliver transformative medicine. And that's what keeps me up at night, not because I'm concerned, but because we're working hard to continue to deliver those kind of medicine.
And as you look at that roster of new drugs, you said you're open to drugs only if it makes sense.
The reason why I'm looking for more, actually, first TP I'll take at 10 and second on 15. It's because we've got the upper green fib, and so far we just trailing on it, so that's why price is so bullish.
Okay.
If you have a look here, it was going there, so if you come back test it, that will my last TP on minis. The fix is dropping.
The VIX is dropping, so that
Yeah,
means this is going to go up. 85.
we
I'm
will
going to put this at.
see. But VIX is so stupid, it's like at 12.
Really? I haven't seen this in forever.
Yeah, this is what I'm saying. It's really. Oh, yes, come back to zero. 25 bucks up
Wow.
even. That's good. So I start
I
to make
moved
profit.
one at 85, so that covers my loss. So I'm at 10 points take profit, but I'm like trailing it, trailing price. So I'll probably take out of that one. And then the other one, I have it at break even at 95, well, 96 or whatever. 15795.87 is where it put me.
Come on. That was such a nice drop. Can you continue with it? Why I miss 160 bucks on profit?
What's the top of the box on London?
Excuse me?
The top of the box for London is where?
Top of the
Like,
box for London opening range.
yeah,
Oh, wait. Yeah, it's here. 31.
I don't. Oh, damn.
Far, far away.
Yep. So I'll probably get taken out here because I took 10 points profit and I'm out. So I only have one left. If I get out of everything, I've made $100.
BC Banking delivered today. Barclays and BNP Paribas, and it's also peak of NIMs at Barclays that has the market under pressure. The lender is cutting its guidance for the UK. They say net interest margin to 3.1%. Total income, a 14% rise in the total income from a year ago. But they are warning here that things are
Good question. Is this is a pullback and we should go long or just stay in our shorts?
trading venues up 41%.
On top of that expensive box,
Yeah.
does
So
that sometimes support?
Not eating too much meat tonight on Barclays. Fixed income trading down 22% at 1.2 billion. The equity revenue fell 60%. Wow. 60% crash in the equity trading division. Down to 563 million. Of course, there was a serious element to the value of. So Barclays is down 4.3%. Paribas on the other side, however, storms away. Cost control, reassuring the street. You've got Morgan Stanley saying that strong set of results. Market did well. So a lot of the analysts are sort of saying the net income 2.81 billion.
he is going higher and going higher.
But the S&P
Mm-hmm.
was below the
YM as well.
down 9.1%
What
year
the
on
heck,
year.
guys? Just
And yes, it was 2.52. But I think really they're just focusing on the cost cuts there. The
I'm out.
processing costs were particularly impressive, according to KPW.
So I have $82.
A lot of job cuts have gone through. It's been a tough time. Of course, the banking sector, investment banking, deals are not getting done in Europe. They are here in the Middle East. Come to Dubai. That is the narrative. Now, Bloomberg has learned that the advisors in the UK to the Chancellor, Jeremy Hunt, are increasingly concerned. But the Bank of England risks raising interest rates too much in the coming months. Is that interference? I don't know. Let's ask Bloomberg reporter Philip Aldrin. Why should the advisors to the Chancellor have any concern at all about what an independent Bank of England is doing? Good morning.
Morning. Well, I suppose they are the sort of economic advisory council, so their remit is broad. I mean, there are a couple of members who are recent members of the Bank of England. There's Andy Howell, who was the chief economist until recently, who was sort of sounding around on inflation quite early. And obviously, inflation is the key issue. So, and they are an independent committee themselves. The Bank of England is independent. I think it's perfectly reasonable for one group of independent people to comment on another.
Absolutely, but I suppose the horse has bolted. I mean, we've had the fastest hiking cycle. I think I don't know whether it's in history, but it's certainly pretty brutal, isn't it? Can you foresee a time when the Chancellor and the PM become more openly critical of the Bank of England?
There was so it's very unusual for the politicians to be openly critical of the Bank of England. You know, obviously since '97 there's been independence and separation of responsibilities. And
Archie White dropping like some mistake
principle
there.
has always been that politicians would not comment on monetary policy. The bank,
So I'm gonna get into micros,
fiscal policy, it does.
short,
There have been moments in
and
2007.
my stop is at 804,
King and the
and that's it.
was Gordon Brown. And
I don't know if it's gonna continue,
Gordon Brown had wanted to
but
intervene in the bank publicly, but felt he couldn't because he didn't want to undermine
if I don't win the trade,
of the
I
Bank of England. So
I had
it's a pretty
that's the
fraught
profit
thing
I made.
for the government to actually go public with criticisms. Politicians are free to do that, and they have been doing that quite a lot. But for the executive branch of Parliament, for the government itself to do that would be unusual.
And so we've got a lot, as you say, of ex-deal policymakers on this country.
what would you say the consensus is in terms of the government's
So
actions?
this expensive
Maybe
bond,
those actions are blocked
that's
and
just,
big-headed, or
that's
maybe
not
they're
always,
straight out of
because I would be wanting to
administration
go
policy as
short
well.
on the expensive
What's
bond.
the government's impact on inflation?
Yeah, so the government's first
Uh,
objective on inflation is basically do no harm.
Usually, yes, but as well as you got such a bullish market, very bullish push, you're not doing that. The first thing is we was on the top of the 200 moving average all the time with the white candles. Candles switch off from white and we are below 200. We've got very small, the last one, very small surge, and we're showing the first bearish surge here. So just Michaels for now to test if they can do anything.
Restrain any inflationary impetus. And there are things they can specifically do, but
Yeah, I did two micros because
if they just want to change the
I'm just gonna trade micros on the top step because I don't want to.
they can do
I want to see if I can accomplish the fund
on a sensitive
thing.
example,
Mhm.
Do you have a funded account, Colton?
there's things they can do.
Yeah, Apex.
Oh, Apex. I don't know what Apex is.
It's
Is it
been
easier than Top Step?
not really because they've got you need to take profits as you going, and this will be difficult for you. This what teach me to take a profit as I going. The reason
Mm-hmm.
why they've got the trailing threshold, and if you will not take profits, price goes against you, it's taking away from your bracket.
Threshold.
Yeah, from the
Oh,
threshold.
I mean, a great performance.
I'm wanting to know basically if someone's funded on Top Step, will the same rules apply? Meaning, um, two two contracts, three contracts, five contracts,
No,
and
they're all changed now because there is only like you can pass in 2 days. I was a little bit too eager and I over. Actually, I opened the top step. What's the name of it? The combine. But
hmm
I bought. I make it too much, and now I need to make 4K extra.
hmm
So that's the problem which I
so
done.
yeah, I hate that because then you're not at 40%, right?
Now it's 50%. So on the second day, I just done much more than I should. First day I done 4,300. So the second day I shouldn't do more than 4.5, and I will need to do third day. But I thought, okay, then the second day I will just make a 6K. And this is what I done, and actually I gone over. And I need to make a bit of extra, so taking it slowly, not rushing.
Oh my God. But then once you become funded, do you have a limit on what you can make? Like they'll do the same thing to you?
I don't
40% of your earnings?
I don't know that. I don't think so.
That would be dumb.
Mm.
I mean, that is the dream scenario for you, isn't it? Which is you have a deflation on the cost and the input side, and you still manage to hike the prices to us. I want to talk about the order book, and I want you to take me inside the order book.
I'm just wondering if you're really building the short orders or they just
True for the rest of the year. I get that.
preparing for the next leg up.
Part of the order book is. I do be told on the other day, and they said there are
So
cracks in
I close the
insulation
oil too early because
as it
it's
were, the
going
strong part of
nicely
that order book. Is it at the upper end?
to my
Let's just break
TP.
it down for me.
It'll be nice if price stay below 200, but the same was in the morning and we was below 200 and then we go above and start this huge run.
Mm.
in September will of course boost the absolute number in terms of all the book. But in the meantime, we have to deliver a lot of cars with the width, which we couldn't deliver for many reasons and for logistic issues in the last couple of months. So, but it's very healthy. We're selling cars at the higher end of the spectrum in terms of equipment. This was also part of our
I guess it was
strategies where
maybe a pullback.
majority of the cars that are selling for riches. And that's the whole story of, volume to value and the revolution. So it's actually working.
VIX is at 12.9.
I'm old enough to remember.
I didn't know VIX was like that. I thought it, oh my God, I haven't played VIX in forever.
Yeah, it was 13, 14, it was 12.
Wow.
Dollar as well is quite low at 106.
Yep.
Will be pressure for sure. It was already the case, this year. What we did is, in particular,
Yeah, you see the MQ.
our pressure score was actually trying to protect the value. So we did
Oh.
enter into this thing, accepting maybe a slightly lower volume that we had planned at the beginning.
That was a nice short.
Then you can see the consequence of this.
Dollar dropped a lot. I mean, not a lot, but from open, it dropped from 95 to 61.
Because then you set the right basis for the future business of EV that we will, develop.
Well, now it's in the Q box. Let's see if it goes up. And if it goes up, and Q should drop, but they don't look like it wants to drop.
Don't look like the stock wanna drop. It's really after the news yesterday. Everything going up. As you can see, individual stocks they going up. Tesla buying pre-market. All of the stocks buying pre-market.
They're chipping in 600 million euros
Mm.
or 15% stake in Ampere. Is that a cherry bite? Are you going to grow that alliance? Are you going to take a
Yeah.
chunk? Are they going to go from a bite to a chunk?
So I have to correct you. It's not 600 million for 15%. We haven't declared the share of this. It's a chip of 600 million, which is a substantial amount of money. The most important thing is that we have secured, in the deal that Nissan will have a board seat in Ampere, which I think is important for us, also to create stronger relationship with our partner, so they will be part of the governance of Ampere. And one of the things that you shouldn't forget is that, in fact, Nissan is, of course, taking a share of it as an anchor strategic investor, but is also, has always decided to produce cars.
Well, I'm glad I'm in micros.
On our plants
Yeah.
in the Ampere perimeter. So there is an upside also in the margin that Ampere will do because of the production of Nissan cars within.
I'll be back in a minute.
Yes, sir.
We have to follow the, let's say, the internal Mitsubishi government process, but the intention is there to do the same, and so we will, of course, be very happy to welcome Mitsubishi people into Ampere.
So you said that there were 5 products. So are they ready to contribute to take it? I mean, 600 million for Nissan. Mitsubishi, would you expect them to do the same?
You have to go with them, so I think that I know that they will be ready. They find that very niche. They are probably very interesting, especially to secure their survival in a way in the European market that will turn to EV very very soon. And we have also ideas on how to serve the and we'll try to do business with them if it makes sense for them. But the question actually has to Kato-san and
I'm back.
Are we still in full buying mode? I look at bank lending in Germany collapsing, credit conditions are tightening.
Okay, so RTY didn't go back yet.
Is buying
Staying
a
lower.
new car still top of my priority?
Only ES and MQ they going higher.
In the consumer or indeed in the commercial landscape?
Look, I think
on one end, you can you can look at the market dynamic and you see that in terms of orders, the market never recovered to the level to the historical level. So we are probably 20-25%, depending on the market, below what we have experienced the last decade. So it's already a fact that there is an issue there. On the other hand, we also have to say that the market has been low for years.
Really?
And it's not that,
Overbought on Q?
for many years,
Huh?
at a certain point in time, people have to renovate the fleet and
That's
the
nothing
cars.
new.
So, and if we are able to, offer things, product that are attractive, and then, of course, we can take
Oh, I
advantage of
lost
it
my
and
trade.
take market share. One of the, let's say, chances that we have
We're going to have to leave it there. We wish you well on taking more market share. The final CEO, Luca De Mayo, my guest this morning, right here on Bloomberg.
Yeah, I'm going the right way, but I'm not in the trade. It's annoying. Ah, I got the buy signal there. They don't come too often. Oh my, last time saw it.
Oh my God.
Oh, because there are a few buys and the price was going nicely up.
I need to find the one that was issued on.
They will smash the very expensive box.
The what?
They will go through the very expensive box. It looks like they are almost on the top of it.
I don't know it.
This is Bloomberg Surveillance Early Edition with Danny Berger and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, 5 p.m. in Hong Kong. Our top stories today. The Fed keeps its options open after raising rates to a 22-year high. Jerome Powell says further hikes will be data dependent as officials fine tune their policy. Attention now turns to the European Central Bank. A rate hike is on the table, but will today's move be the last in the cycle? Bloomberg is live in Frankfurt as the ECB decides. And the global earnings parade continues. Meta surges after a sales beat in a sign that ad spending is back. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Preeti Gupta is in New York. Preeti, I gotta be honest, I'm way more excited for the ECB today than I was for the Fed. It was a snoozer, but it was kind of meant to be a snoozer. No surprises, no fireworks. I think that's really what's creating a little bit of tailwind when it comes to the markets, because that is where you're seeing fireworks. A little bit of green on the screen being this morning. Now look, it is 5 a.m. New York time. Traders are just getting started here stateside. From a macro perspective, we take a look at this. S&P 500 futures already higher by 0.6%. I'll do you one better, Danny. Look at NASDAQ 100 futures higher by 1.2%. Essentially, this idea, that key line in the presser yesterday, that the Federal Reserve staff thinks that maybe a recession is now off the table, that a soft landing was indeed achieved. Of course, we will see if that's true in retrospect, but it's enough to give a little bit of a push to the equity markets a little bit higher. Add on the earnings beat you saw from Meta after the bell yesterday, and it gives you an extra boost into the text here. The idea that ad spending is back. We're going to dive into that story
Are you
throughout
still
the
in
hour.
your short?
Look, the buying market
Micros,
still
yes,
doesn't have
minis
a
not.
snooze fest concept from 386 odds.
Oh,
Euro
you were in
futures
mini strip?
unchanged at the moment, but
Yeah, I
the
opened like for a scalp for
most
15
positive
points,
space
but I got only 7 points, and that's it.
is going to come from
So
what
I
we hear
took
from
the
the
first
equities
TP,
today.
and the
We'll wait
second
for it
one
from the other
it
side
took
of
me
the
out.
Atlantic. Interesting to me, though, is that the FX market is doing something wonky on its own, because if you look at the dollar, you are seeing broad weakness down about 0.3%, but its biggest index contributors for the Bloomberg Dollar Index is coming from Mexican peso and the Bank of England, the two most hawkish banks at the moment in the world right now. Nevertheless, dollar max below
It's like
6
whenever
Korean dollars
MQ
down.
try to go to the value area, they are rejecting it. So they
Mhm.
want to create a higher value area.
All right, I've got a Europe wrap up here. It is all about earnings in Europe until we get the ECB. That, of course, will be the main show. Do we get a shift to a more dovish stance from them? For our TV audience, I got a little bit of weirdness on my screen. There we go. It's all fixed up for you. European stocks, those are up more than 1%. All right, we're going back and forth here for European stocks. There we go. Full for you. Up more than 1%. The euro, here's where we're seeing some strength coming in versus the dollar. Again, this makes me scratch my head. Why is the euro so strong when the data has been so weak? It really comes down to the fact that it's the dollar moving things. It's perhaps a Fed that didn't have any hawkish surprises in their decision. It's also benefiting sterling. But this is what I come down to as to why this is more about the Fed than it is the ECB, because German yields are ticking lower by about 2 basis points. If this was a story of a more hawkish ECB, that should be the case. But instead, we're seeing Germany and really throughout all of Europe just track the American bond story. Yeah, and I think it's going to be perhaps a little bit of a role reversal in just a couple of hours. To your point, Danny, but let's stick there. Let's stick to that stateside story. The Fed raising rates to a 22-year high for the 11th hike of this tightening cycle. Markets speculating whether we're at the peak as Chair Powell leaves the door open for more hikes.
I would say it is certainly possible that we would raise funds again at the September meeting if the data warranted. And I would also say it's possible that we would choose to hold steady at that meeting. We're going to be making careful assessments, as I said, meeting by meeting.
Bloomberg Markets editor Phil Serafino joins us now. Look, Danny called it the snooze fest, and it did kind of feel that way when you heard from Chair Powell. Yet you're seeing the equity markets really rallying off of that news. Is it safe to say that we've achieved a soft landing?
It's hard to believe, but it does look that way. I mean, a lot of people have been skeptical, myself included, that the Fed could thread that needle, bring inflation under control, and
When I
not trigger a
have
recession.
an
The
email.
equity market's been optimistic about that for months. You know, you look back to the lows in March, right after that
Another
panic around regional
divergent.
banks in the U.S. The equity market has taken off, and the
It's
things that are
nothing.
leading
It's
are
just going higher and
tech,
higher.
financials, consumer discretionary. So the market's been pricing in sort of the perfect outcome, and at least
So is
that's
that good or bad for
anticipated.
your short?
Now you have to look ahead. Powell says
That it's going higher, it's bad, but divergent is good. But as I mentioned, divergent won't do anything. We're waiting today for GDP and unemployment claims, so probably till the news will be going higher.
So you think it's going to be better?
They
You think
ex
unemployment's going to be good?
yeah,
Is that for the United States?
Yeah, for US, they're expecting actually.
Oh,
It does indeed.
I
Ah,
don't
And
think
the
it
other
can
thing
be
is
in that, right?
that the UK has been an outlier all
that's
along.
strange. They're
Inflation's been
expecting
running much
more
hotter. The
unemployment
economy,
claims,
the economy has
which
been
is
in tougher
worse.
shape, and they have a lot farther to go. You look there, inflation's still hanging close to 8%, whereas the U.S. has gotten it down to 3, the ECB has gotten things down to 5 in the
Okay,
Eurozone.
pullback
So
is
it looks like they
starting.
have farther to go, and I'm not sure how well the markets would take it if the BOE were to back off in the face of what looks like political pressure.
But I don't think. Let me see.
Again, we know this UK bond market is one that's really
Calendar.
giving to Andrew Bailey. So
Uh,
John Vigilante with none of that, I'm sure, Phil. Thank you so much for joining us, Phil Serafino there. Okay, now our focus turns to the ECB. President Christine Lagarde is expected to follow in the Fed's policy footsteps with a 25 basis point
do
rate
they
cut
have
early
that
Monday.
anymore? The
Here's
calendar where
Megan's
you
on the
can't
joint
be
today. So
trading
is
because
that
it's
today
whatever.
at the
No,
ECB
and
in London?
you can
What
trade
this
on
decision
top step
from
on
the Fed
everything.
yesterday was widely expected.
They don't have a
However, the
restriction no
25
more.
basis point
No,
hike
they don't have
itself,
any
where is our focus
restrictions.
going to be on today? Yes, Danny, it is expected, and of course, nothing is official until she makes it official. And that is, of course, the head of the ECB, Christine Lagarde. But again, she pre-announced this hike today in the previous meeting, repeated this idea in central that inflation, well, maybe cooling down somewhat, but it's still projected to seem too high for too long. So therefore, warranted action was needed for today. And then, of course, you have the core CPI print that came in for June of 5.5%. You put it all together, and it takes you to this 25 basis points hike today. But you're right. It's not so much about the monetary policy decision per se, but it really is about this press conference and the guidance going into September. We know that July was seen as a necessity by the central bank, but September is up for play, and that's where the focus will be. Any indications, any inclinations from the European Central Bank in terms of what the future path for rates will go. And of course, with September in focus, you mentioned the future path of rates. Just how important is this press conference then? I mean, what kind of precedent could Madame Lagarde actually set? Yeah, it will be key because again, it's about the calibration of the message, is the messaging, it's the language, is the tone that she will use. And look, there's many ways that this could go. And of course, we're waiting for that press conference to figure out exactly what is the message she wants to deliver to markets. On one hand, you could argue, well, she's still going to focus on for a single mandate central bank. There could be a hike with a dovish pivot or just altogether, and the ECB that decides to be just neutral, no actual bias either way. Just look at the data, revert back to mega data dependent, and wait until the summer break when you have this idea of the monetary policy, the lag behind it. This is the
What were they
trade-off between
wearing?
inflation and the economy. We've got the London survey, we've got the PMIs. This
Mm.
is really an
There will
economy
be
that
another
may be and remain
move
under
up,
pressure. So
or
it's really about the stimulus
everything
package and
start
start really
buying
having the potential to just create
gold,
stability altogether, to leave
YM,
all options open and just
ES,
mega data
what
dependent. Remember, think back
includes.
to that line that she used to repeat up until a few months ago. Chris, Maria, be honest with me. What's more important today, Lagarde and the ECB or Mbappe and Real Madrid? Mbappe and Real Madrid. Look, wow, that's a very difficult question. Look, what I will say is he wants to play for Real Madrid. I know it. You know it. My 85-year-old grandma knows it. This is just a question about putting a number on that contract. Mbappe, you know, if you recall
Yes,
today's
already make a
sentences,
new
it's
high.
a deal now. If you need a house in Madrid, I help you, but you need to really get into the saga. It's been going on for too long. If you want to play for Real Madrid, let's just put it
I'm
on
gonna
the
try
table.
along.
And I'm sure he watches because obviously he knows
It's
about his
my
personal
road.
finances. I mean, it all comes down
I
to
don't
the
want to go long
so
here. I rather wait few hours and trade in the on a New York session.
happily have you as a roommate. Maria
The
today
micros, whether they will run or not, we will see.
tune in. I love it. Okay, great. If he wants to live in Brussels, sure. Maria's also got a place for you there. Tune in to our special coverage of the ECB decision and press conference at 8:15 p.m. New York time. That's 1:15 p.m. if you are in London. All right, the big week of tech earnings continues with Meta topping forecasts for second quarter sales. CEO Mark Zuckerberg spoke about the company's bet on the metaverse on their earnings call.
I can't guarantee you that I could be right about this bet. I do think that this is the direction that the world is going in. There are a billion or 2 billion people who have glasses today. I think in the future they're all going to be smart glasses. And all the time that we spend on TVs and computers. I think that's going to get more immersive and look something more like VR in the future. And it's like all of these trends line up to make me think that this is the right thing. I think we're going to be happy that we did this.
Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, usually the market doesn't love the idea, or at least in the recent past, didn't love the idea of Meta spending a lot of money. But this time, the focus wasn't on that. The shares are up 8% pre-market. What's the concentration of markets?
Yeah, well, it's definitely not the metaverse. It's all about AI, and I guess what's happening with that ad revenue. So it's a pretty simple business. They make their money from selling advertising. In the quarter, we saw that ad impressions were up 34%. Pricing was ad impressions down 16, but the trend's an encouraging one. And for the next quarter, they're expecting an acceleration in the growth. So ad revenue is up about 12%. The quarter just reported, maybe about 20% up in the next quarter. There's a couple of things going on there. First, Reels, the kind of TikTok rival, is getting more and more traction. So that's encouraging, and that's helping to get people to spend more time on Facebook. The second is how they're using AI to promote new content to users. So making it say, you're kind of following this person maybe you don't follow, they've got some interesting content, let's show that to you. And that's also helping to boost time on Facebook, and that allows them to sell more ads. So I think people are encouraged that the momentum is improving. They're getting traction with some of these products and on AI.
Well, Matt, at the core of that is these AI processors. It's more expensive. It requires more chips as well. Let's bring another player into here, Samsung. How well placed are they to tap into that rising demand for the AI space?
Yeah, not so well placed now, but they're clearly pointing to improving trends in the second half of the year. And AI is throwing up all sorts of new buzzwords. The new one we've got is high bandwidth memory, and this was a big announcement from Samsung today that they're planning to double their production capacity for those high bandwidth memory chips by 2024. And those chips essentially will allow you to train AI technology for things like generative AI. So I think they're going to be a bigger player there. Inventory has really kind of hurt them in the first half, but they're expecting that to unwind. They said inventory peaked in May. They're expecting demand for chips to pick up in the second half of the year. They're not the leading player in that space. It's one of their local rivals, SK Hynix, the big rival, but they're clearly trying to make a big push in that space. And clearly AI is going to be a massive part of the technology market over the next 5 to 10 years. So it's definitely the right thing for them to be doing to shift investment in that direction.
Yeah, thank you very much for all of that. That's Bloomberg Intelligence's Matt Bloxham. And later today on Bloomberg, we're going to be hearing from the Meta CFO, Suzanne Lee. That will be at 12:30 p.m. Eastern. First, though, coming up on this show, a beat for BNP Paribas and a miss for Barclays. We'll have more on today's European bank earnings.
Yeah, the price probably will stay here for the new 4-hour candle. The area will move
Mm-hmm.
higher in an hour, and then they will go higher. We will see. As long as I will be in a
Because price is above the 4-hour candle, right?
yeah, as long as I'm in profit now, before the new 4-hour candle, I'll take some profits, go break even, and probably go long if that will be the case.
And we are still in the expensive. Yep. Yeah, we
Very
are.
expensive.
What the hell?
I want to see if they will make a new low. This pullback or not.
My internet, I don't know what the hell is going on with that. Very annoying.
You can see on the search how many bearish divergent it's showing.
Hmm.
It's one after one. But it was showing a hidden bull at the beginning. There was a perfect buy.
No, no buys.
There was,
uh,
before London Open.
okay.
Equities we are performing a tad better than average. And if you're looking at that fig, it's basically a tad lower. And the reason it is a tad lower is that BNP Paribas is a European powerhouse when it comes to fixed income. And one of the elements that we sort of picking up in the previous quarter is basically the US-based clearing side. And so BNP Paribas is more European, therefore is on that part a little bit different. But if you look again at CIB as a whole, the bottom line is at 5%.
CFO of BNP Paribas there speaking earlier on Bloomberg Television, calling it a European powerhouse. Jan Patrick Barnett joins us now for more on today's European bank earnings. Let's start there with BNP. Look, they called it a European powerhouse. We know it's one of the largest banks in Europe. What kind of tone are they setting for Europe at the moment?
Well, I guess if you ask the big banks, everybody says he's a European or European power. So that's kind of interesting. Well, I mean, the thing is like the operational business was not too bad. I mean, like interest rates are still helping the bank, of course. We've seen some
Okay.
softness in the fixed income
You
trading,
piece of
which is
crap.
the traditional strengths of BNP, and that's not perfect. But the shares are up because BNP is pulling an old European banking trick, and that is if your operating business cannot like convince too much, then you just like screw the tops a little bit tighter, and they did this very successful in this quarter. And that's something that I was surprised by a little bit because I thought like the European banks are like pretty much have reached the lowest cost base that they can. But it seems like there's still room for improvement, and BNP did this, and so shares up by about 3%.
But the blessing and the curse of higher interest rates is okay, it can benefit someone like BNP Paribas, but JP, it looks like Barclays is a really good example of what happens when NIMs peak.
Yeah, absolutely. And we saw this already yesterday with the reporting from Lloyds that we have like diverging paths here in Europe where the EU rates are still like providing some tailwind for the banks, while in the UK
Come
it
on.
seems like the peak is behind them and all the benefits are reflected in the
You
numbers.
long now
So
or
that's
short?
boding well for
No,
Barclays
I'm
and
short.
the guidance for the rest of the year regarding
I
their
tried to get on
earnings
the
are
top
very
when
good.
it hit that, but I didn't
Barclays also
catch
has
it because I
mentioned
was
that
trying to. I'm trying to find my driver license, and I was looking through laundry.
the numbers actually, I would say, were not
I
like
got in at
super impressive. But if you're operating
91.25,
a
but
system like Barclays, where investors really don't like your stock, you have to be like super convincing and super strong on your numbers, and they just couldn't show that. That's why the stock is like down 4% today.
Yeah, some interesting divergences and messages coming from the European banks space. Bloomberg's Jan Patrick Farner, we thank you as always for breaking that down for us. We go from banks to cars. European auto giants also reporting this morning. Volkswagen, the odd car maker, out in an otherwise upbeat earnings season for the industry. Bloomberg's Oliver Cook spoke with the CFO on earlier. He says he's optimistic.
There's a certain uncertainty on the side of the
come
customers
on.
in terms of inflation, but I personally don't expect a recession in the next quarters. And for the automotive industry, both this year and also next year, we are quite optimistic. I expect a small growth, 4 to 5% for the automotive industry next year. And this is also true for the major regions, mainly US and Europe, and China perhaps a little bit lower.
Oliver Crook now joins us for Berlin. Oliver, look, the Volkswagen CEO, the chairman of the Federal Reserve, seems to be
No,
on the
make
same
new
page
higher.
But it
as the
doesn't look.
macro. Talk us through the key takeaways.
What do you think? You think is it getting exhausted at least?
Don't look like it's
Oh
exhausted.
my
Definitely, is
goodness.
overbought is exhausted, but they're looking to go and make a new high.
Maybe I should just get out of this short. I was trying to recoup again, but
reinvigorate their EV sales in China, which are really lagging behind. And now if we breeze through some of the other companies that do a little word association, Mercedes, Maybach, up 40%. The luxury trade is still in. Stellantis, it's all about costs going down, margins beating. Renault, record margins there. And Porsche signaling some issues on the supply chain, but again, a solid quarter. Regionally, really it's the United States that is showing resilient. Europe is a little bit more mixed. It's going to grow a bit. However, what is
Okay,
overall
yes,
what
the
we're learning from this, as we were
rejection.
saying, is that the soft
Why
landing narrative is
M2
really applying here for the auto sector.
and the
Over
RTY.
elsewhere, the Dutch
Oh,
Coast Guard is
RTY
trying to extinguish a fire that occurred
Come on,
Right.
just drop.
at the moment. It seems like the thought is
Well,
that potentially
I
it was
have a.
an EV that caught fire.
If
Whatever
it breaks, go
rumor might
short.
be
This is what number is
saying
this?
about this, I mean, if anything, this is not a good
785.
image for them.
No, and that's still speculation. We don't know yet, but we know that of the 2,857 cars, 25 of them were EVs, reportedly, and the speculation is that one of those caught fire. And this blaze is still going. We're coming in on 36 hours of this burning. So whose cars are they? I spoke to the Mercedes CEO a little bit earlier. Here's what he
Can
said.
we make new law?
About a tenth of the vehicles on that ship are Mercedes. And we're in contact with authorities to establish the facts. So we're looking into that as we speak. And as the facts become clearer, then we'll see how things unfold.
So that's about 300
They
cars
can
that
drop
belong to
it
Mercedes.
before
That's
the
25
previous
cars
law,
that
then
don't
it's
they all
illegal.
belong to, but we know that
Mhm.
Stellantis, Renault, Nissan, Toyota say it's not
I have
81,
a.
at
BMW
least
says that their
81, or
cars
see
are.
if they will
So
give it
so
that
we
or
have to
not.
get more
Try.
details because they are really the focus now is extinguishing
But
Well,
the
the
fire.
previous
we
bill
got the
was
exhausted
780.
sale.
Very complex operation. The craziest thing perhaps is that this is the second time that this has
So
happened
we got
in about a year and
a
change. We
candle
lost
there.
4,000 VW vehicles last year in the United States.
Yeah, that is incredible, Oliver. I honestly had no idea that this is something that had happened before. Oliver, really fantastic interviews. Bloomberg's Oliver Cook there in Berlin. Coming up, we're going to take a look at some of the other earnings out of Europe, some big movers to cover. This is Bloomberg.
I cannot believe I don't know where my license is at.
Okay, the trading stop is not far.
Okay, I moved to break even. It's a mini,
Okay.
one mini, but I was doing it to recoup what I lost on the micros, the 4 micros. But I don't know if I should just get out
Why you
and
not? Why you won't try the use like 2-3 minutes then on ES? It's moving
on ES. I don't know.
is moving very similar to MQ and won't go against you. It's not
I've
as
never, I've never played ES.
okay.
I guess that's why. Let me see. I've never ever.
No, then you will need to just spend some time to check it first. Don't do it. You never done it.
I would go long right now though,
That's a good
and I'm gonna
idea.
get taken out. I'm gonna get taken out right now of this one, but I would go long on this PS right now. I'm looking at it, but the same with NQ. I'm out. I'm out. I'm out. Out. Let me come back this way. Let me do minis. I mean micros. Long on micros.
RTY drops so nice. I think the RTY dropped so nice. What?
Oh, really? RTY. I used to play RTY.
I don't know what the rest is waiting for.
Right. You still in the live session?
Mhm.
I have to be a candle at um, 1:15. Purina cat and animal branding performed the best for them. Show that is tumbling a tough quarter from a high bar, but they did announce $3 billion worth of buyback. And then one of the best performers, Universal Music Group. Pretty, I'll give you one guess as to which artist has made the most money for them when it comes to merchandise. Who do you think that was? I mean, I want to say Enrique Iglesias, but I know it's not him.
The Master 9 generally was such a nice easy 100 points.
I know. Oh my God. And I didn't get it. I wasn't even looking at the market at that time.
At least YM giving me some money.
Oh my God, I had 720. I was on the wrong chart. 772. Okay, well, this will probably be my last trade. Because I haven't really made any profit today.
You make the profits and you
Not,
lost them.
no, no. I haven't made no profit because I was recouping. So I'm back to 50,000. Well, I'm at 49.94, so I'm back to where you start.
Mhm.
So I recouped that, but that's why I moved to micros since I recouped it. I mean, I honestly see a short, like, I don't know. I don't see a long, but it hasn't been working, you know, because
Yeah.
it's very bullish. I had an old level there at 15,785 and I was on the wrong chart. So I was on regular MNQ and that doesn't have any of my lines or anything like that. And then I went to MNQ exclamation mark and there are my lines. And 725, it was stalling a lot at 725. Like it was on that line for a long, all of the Frankfurt. I think that's why I had a limit on on the practice. Oh, Sandra.
But you got the one contract long, you were saying you took a micro long.
Yes, two micro long. Oh man, did it? Hold on. Where's my? Oh, it's okay. I only have a stop loss. I have a stop loss of 72, 75. I got in at 92.
Well, it's back. I'm pretty good in New York with Danny Berger in London. Look, Danny, it's about 48, I would argue 72 hours of central bank palooza. But when you look at the bond market, the stock market, earnings still playing a really big role. They absolutely are. It's supposed to be moving European markets here pretty. Although I will say, out of everything today, I still can't get over Maria Today telling us that her 80-year-old grandmother would house Mbappe if he went over to Real Madrid. I think that's the real story today, not Christine Lagarde and the ECB. All right, I digress. European equities are up 1%. It's exactly because of the earnings story, pretty. A lot of big caps reported and reported well. Nestle, consumer goods, car makers, banks. We were just talking to our reporters about it. The euro continues to strengthen against the dollar, as does sterling. Can that sustain itself? If we get an ECB today that maybe takes a slightly more dovish turn, we're going to be talking the Commerce Bank about that in just moments. But it's clear that the bond market is not necessarily indicating any more hawkishness than that of the Fed, because German two-year yields, they are moving lower by about 2 basis points, and we're buying bonds much like we are in the U.S., pretty. Yeah, and it's interesting that some of that sentiment that you're seeing in Europe is already having a read-through to the U.S., although I would argue it's perhaps, I want to know what the opposite of a hangover is, but whatever it is, it's this continued story here in the States. The S&P futures, you are already seeing a rally on our hands, higher by 0.6%, but the real outperformance comes in those tech shares. NASDAQ 100 futures higher by 1.2%. And look, this is the combination of both the macro and the micro working in the equity market's favor. Essentially, that the Fed came out and said, look, the recession risks that we saw maybe a couple months ago, they're off the table. It's no longer part of their key thesis. And on top of that, you have Meta saying ad spending is back. And look, in the tech space, that ad spending is very large and very exposed to economic cycles. So good news from both a macro and a micro perspective. But Amy, to your point, the 10-year yield far more exposed, perhaps not necessarily to the Federal Reserve, but to the ECB. Well, we're going to hear from them in the next couple of hours. Right now, 387 on the 10-year yield. I got to bring your attention to the FX space, though, because you are seeing broad weakness into the dollar. That kind of makes sense given the macro narrative that you were seeing from the Federal Reserve, that they might be nearing the finish line when it comes to hiking. Nevertheless, the biggest contributors to the Bloomberg Dollar Index are the Mexican peso and the pound. And that really is crucial because those are the two most popular central banks in the world right now, sending dollar mex below that key 17 level, 16.75 there, weaker on the dollar by about 0.5%, Dan. Yeah, it is a market convinced we're in the middle of the dollar smile, and that came after the Fed's 11th rate hike of this cycle. Pretty, we've been talking about it all day. It's the Fed funds rate at its highest in 22 years. And investors are saying we're likely at the peak. They've trimmed their bets on further increases from
I'm up $10 if I get out right now.
Chair Powell at the post-decision news conference.
The staff now has a noticeable slowdown in growth starting later this year in the forecast. But given the examples of the economy recently, longer forecast,
I have 5 by 5
we'd be comfortable cutting rates when we're comfortable cutting rates, and that won't be this year. It's really a question of how do you balance the two risks: the risk of doing too much or doing too little. We're coming to a place where there really are risks on both sides. It's hard to say exactly whether they're in balance or not. I would say it is certainly possible that we would raise funds again at the September meeting if the data warranted. And I would also say it's possible that we would choose to hold steady at that meeting. We will continue to take a data-dependent approach in determining the extent of additional policy firming that may be appropriate.
That is a man who did not show his hand. Chair Powell really keeping the door wide open. And the quote of the day yesterday, it has to go to Seema Shah of Principal. Here's what she said. Getting a rate signal out of Powell today is like getting blood out of a stone. He's keeping it tight. He usually slips up a bit, but he seems to have mastered it now. What does it mean to the markets to have a chair who has mastered the art of keeping his hand close to him? Joining us now is Esther Eichholz, FX strategist at Commerce Bank. Esther, what do you make of this making of a Powell who didn't indicate either way of where the Fed was going to go next after yesterday?
Well, I think he made a great job because that's the best that Fed can do right now. Like with the hike yesterday, they basically kept the door open for reducing the rate hiking pace to one rate cut every second meeting. Or, of course, they can simply change their projections in September if necessary, if the data coming out throughout the summer indicate this. And like in retrospect, they could have ended the rate hiking cycle yesterday. There's just so much uncertainty about economic developments, inflation developments, and I think that's the best they can do right now. And I think the flip side of that, like of not being in this comfortable position of keeping everything open, we will see that tomorrow in the for the ECB, because they are not, like they are in much more difficult position to master this communication. Yeah.
Yeah.
I'm
Yeah,
sorry.
exactly. I mean, no, I got you, Esther.
Difficult communication, yeah.
Yes, communication is difficult. So, look, okay, on that point, the ECB. Yes, exactly. Well, the ECB, we had Klaus Knop, once a very hawkish member, refusing to commit to a September rate hike. This is different from him. This is something we haven't heard before. Do you think
20 minutes wygodzenie for our
what we're going to
candle.
get from Madame Lagarde today?
Let's switch off the
Absolutely.
YouTube.
In my opinion,